So what are interest rates doing? What are they going to do? What about house prices, where they're at? These are kind of questions that are flying at me, and you know what? I've got a lot of information, a lot of data, RBNZ stats, REINZ stats, and you know, I've come to the conclusion with all this data that really house prices are up, down, interest rates are down, up, Strait of Hormuz is open, close, and there is peace, war, I guess. So where is it all going? I mean, you know, there's so much noise, and I think this is the time where you kind of just got to go, you know what, let's just stick to the fundamentals here. Where are we really at? In terms of interest rates, let's address that first, right? Interest rates, strangely enough, to me, look okay. And I think it's kind of pegged back because the economy is not doing too well. Inflation is going to be high, so you know interest rates are not looking better than they would otherwise. But either way, I think a lot of the increases are already baked in ahead of time. But there is some room for competition between the banks. I think there's some fundamentals, there's some real appetite to grow. So we might see some kind of specials coming up. But I feel like the specials are going to be more bribes around cash incentives. Interest rates might just be flattish. I don't know if there'll be much competition on interest rates, but you never know. Key thing, fundamental there that still applies to have some clarity is we as financial advisors always look at your situation. If your income relative, if your debt is high relative to your income in the coming years, then we have to build in some certainty. If really the debt is low compared to income, you could take some bets, right? But then age comes into it. If your mortgage is not going to be around for a long time, then again, you're not going to fix long term. So all of these different little variables we think about when we look at your own situation, and those fundamentals, they never change. And so you kind of got to see the clear path forward for what's good for you and your family. Talk to a financial advisor like us. But on house prices, surprisingly resilient when I look at the REINZ stats. Again, I think it's a story that I've gone on and on about before. If you're buying and selling, if you're trading up, it doesn't really matter. You keep hearing that. In some sense, like a flat market is a great time to be trading up. However, it's not completely flat. So just be aware of the type of property you want, where you want it, because I can tell you now that owner-occupier areas with lawns, there's still competition for those houses even now, okay? Of course, you know the story. Townhouses or rental, predominantly investor areas, maybe they're a little bit more flat than the other areas. So you just got to really kind of think about your situation. If you're trading up, it doesn't matter. If you're selling and buying in the same market, it doesn't really matter. But if you are going to be investing in property, then of course, look at the true costs. What is it really going to cost you to hold? And don't expect rents to go up very quickly, because one thing we know, the rental market is subdued, the growth in rents. But fundamentally, I think this whole idea that property investment is dead and gone, sorry, if inflation is around, the fundamentals are still there that support property prices over the long term, and that's got more to do with debt and leverage and how long you can get it for, and what inflation does to debt. And let's face it, inflation does water down debt, hence why things like property investment still make sense over the long term. But the key thing is the long term, right? You've got to get from here to the long term. So the cash flow and the robustness in your situation and how you set things up before you dive in is important. I'm rattling on a bit now. If you're a first home buyer, of course, it doesn't matter, right? You just want a home. Again, timing the market is not what makes people money in this game or makes them financially secure. It's the time in the market. I think you've probably heard that over and over again. That still rings true today. Some people are starting to say stagflation more. That is a bit different compared to yesteryear. But I will say one other thing. that we probably have been in a little bit of a stagnation, stagflation for a little bit of time now. And I actually think we're a lot more resilient than we think, because when you look at when you start to think about things, an overview of the macroeconomics, it starts to get confusing. But when you start to think about yourself locally, like if you have a secure job, if you've got room to invest, then of course you do it. If the time's not right, if there's uncertainty, then of course you basically have to batten down the hatches and make sure that you get through this, right? So I don't think a lot of those things have changed. But yes, stagflation is a bit different in that when you see a really slow economy in the past, you see interest rates drop. That doesn't work exactly the same way. But I would also say one other thing. With stagflation, if you see a really high inflation, do you see a lot of interest rate rises? I would question that, because I don't know how much of the economy the central bank would be happy to see a demise in, I guess. So I think it's some new territory that we haven't seen for a long time is where we're heading. And in that, I think probably flat rates, well, not too much movement in interest rates and house prices is probably what it would be easy to predict that. But I think over the long run, again, the fundamentals still apply. Make sure you're resilient. You can handle things over the long term. And remember, you can fix some short, some long. You can actually have certainty over your own situation. Yeah, talk to a financial advisor, I guess, is the main message. Thanks for watching.